In a recent address at the International Business Council of the World Economic Forum in Geneva, Christine Lagarde, president of the European Central Bank, ECB, highlighted the resilience of the euro area economy amidst global challenges. Let's dive into the key takeaways and market reactions from her speech. Bold opening. The euro area economy has demonstrated remarkable strength, proving its ability to withstand adversity in the face of a complex global landscape. But here's where it gets controversial. Lagarde acknowledged that recent trade agreements have helped to ease some of the global uncertainty, although it remains far from eradicated. This acknowledgement reflects the ongoing efforts to stabilize international relations and trade dynamics, a critical factor for the euro area's economic health. Despite the global slowdown evident in the second quarter, the euro area's resilience was evident. However, growth projections suggest a deceleration in the third quarter. This insight is crucial for investors and policymakers alike, as it underscores the need for strategic planning and potential adjustments in fiscal policies. At the time of writing, the Euro-USD exchange rate remains stable around 1.1640. This stability could be attributed to various factors, including the ECB's policies and global market conditions. For the uninitiated, the ECB, based in Frankfurt, Germany, serves as the central bank for the Eurozone. Its primary role is to oversee monetary policy, setting interest rates to maintain price stability. The goal is to keep inflation near 2%, a target achieved through adjusting interest rates. Higher interest rates typically strengthen the euro, whereas lower rates have the opposite effect. The ECB's governing council, comprising heads of Eurozone national banks and 6 permanent members, including Lagarde, meets 8 times annually to make pivotal monetary policy decisions. These meetings are pivotal moments for the Eurozone economy, as they can significantly impact the currency's value and economic activities. In extraordinary circumstances, the ECB may employ quantitative easing, QE. QE involves the creation of euros to purchase assets such as government or corporate bonds from financial institutions. This action often leads to a depreciation of the euro. QE is a measure of last resort when traditional interest rate adjustments are insufficient to ensure price stability. It was deployed during the 2009-11 Great Financial Crisis, the 2015 inflation slump, and recently during the COVID-19 pandemic. Conversely, quantitative tightening, QT, is the reverse process, implemented post-QE during economic recoveries when inflation begins to rise. QT involves halting bond purchases and allowing existing bonds to mature without reinvestment. This strategy is generally bullish for the euro. It's important to note that the information provided here includes forward-looking statements subject to risks and uncertainties. While we strive for accuracy, we cannot guarantee the information's timeliness or absence of errors. Investing in open markets carries significant risks, including the potential loss of capital. Investors should conduct thorough research and assume full responsibility for their investment decisions. The views expressed herein are solely those of the author and do not necessarily align with FXStreet's policies or advertisers' positions. The author accepts no liability for information obtained from external links. In summary, Lagarde's speech underscored the euro area's economic fortitude, even as challenges persist. This narrative invites further discussion on the effectiveness of current policies and the future direction of the Eurozone economy.